Hi, this is Anthony Parent of IRSMedic. Thank you for joining me today. We have a new format we're going to try. I'm going to read IRS press releases and sort of give you my insights from them to see if there's any sort of YouTube magic going on with this or some podcast magic. I've been doing tax for a while and I have, a unique insight into a lot of these things as they come out. So we have a press release. Here's the first one we're starting with. I just sort of wanted to start with the first one, and this is what I came to. April 9th, 2021. The IRS says, IRS urges participants of abusive MicroCaptive insurance arrangements to exit from arrangements. Now, that was a hard headline to write, don't you think? Because you used arrangement twice in there. You know, right? It's like, the guy writing this, he's like, I really want to use a different word other than arrangement. But someone probably said, well, you got to use the word because that's what it is, a captive insurance arrangement. It's like, right, but, it doesn't read that right. Oh, well, it's tax. And so sometimes we have to sacrifice beauty for whatever this is. Okay. So what is this press release about? Well, a MicroCaptive insurance arrangement is something where a small business, small, medium-sized corporation, business owner will take a bunch of their income that they make each year, write it off their books, not pay taxes off it, and send it over to an insurance company that they actually own. And then that insurance company takes that money to insure all the company's risks that it may have. So MicroCaptive insurance companies are really good for small businesses just because the captive insurances are good for medium and large businesses. It's a great way to get income off your books to lower your taxes. And also it provides a fantastic risk mitigation strategies, really low cost mitigation because you own it yourself. And the other benefit, it's as if it can't get any better, captives and micro-captives, what they allow you to do is take that income, that ordinary income that you're writing off, and then when you do dissolve your businesses, that you will have to pay taxes on the growth, you will have to pay ordinary income, or you will have to pay income on the growth it has year over year. But the premium that you put on, you only pay taxes on it when you dissolve the captive. And what it does is you're not paying ordinary rates. You're paying lower long-term rates on that too. So as if it can't get any better, not only does it changes the characterization of income to something a little bit more beneficial for you. And, for most people, it is going to be a pass through. They're all going to be S corporations. And so there's ultimately some individual on the hook. So these are really some of the just best things around. Now, the issue why, so maybe you heard a little bit about captives, maybe you have one yourself. Maybe you have a few questions, and just to answer some of those questions right off the bat, where you typically look to have income is about $500,000 of income each year that you're willing to pay towards premiums. Your fees will be about $20,000 to $50,000. I do not do captives myself. You want to have a whole captive team. I mean, there's a lot of compliance. You want to be expressly set up for that. That's something where you don't necessarily want to go hire an attorney to say, hey, I wanted to go do a captive. Really, the course of action is to go to a captive insurer like Oxford. They're in Pennsylvania. They're a company that I know. I haven't done business with them, but I have gone through a lot of their stuff and looked at their stuff, and pretty impressed by it because it's really it's compliance. It's just making sure everything is done correctly and filing correctly and having everything. If you're ever in a position where you're examined, it goes very quickly because everything's in order. And it's really something when you do get into captives, it's like, this is such a great deal. You don't want to mess around. You want to make sure, this is what I would say, you want to ensure that your captive insurance sticks in there. So be sure you get your compliance done all the way. There's really no benefit. And I think the thing is, there's really no benefit to taking shortcuts. It really doesn't help you out, again, because it's so helpful as it is. Now, here's an IRS press release, and this is sort of an IRS press release. You're probably saying, Anthony, I actually wasn't looking for any news on abusive MicroCaptive insurance. And actually, I wasn't even on my radar. So that's sort of a weird thing for this to kind of pop out of nowhere. Well, the thing is it didn't pop out of nowhere. The IRS doesn't like captives. And, it gets this ideas. Congress passes these laws. Who writes them, we don't know, but at least Congress passes these laws with some sort of intent. And captives give great benefits to businesses. And then another one, R&D, research and development credits, give great benefits. We often see the IRS take this hard line, a very hard line, and creating a very difficult line to follow that sort of runs counter to what the intention of Congress is. The IRS is always sort of inserting its own sort of institutional bias to everything, saying that's too good of a deal, we're going to come down hard on you. That's basically what it is. So this is probably a case the IRS saw in here. It's Kaler Land and Development Commissioner. And I looked at the case. It's basically looks like a pretty wealthy family who is doing a lot of land development all around, has a lot of related entities, and somebody told them about the captive. They looked into doing it. According to the tax court, basically this is it. They didn't follow the formalities. They're saying that the captive really didn't insure properly. So that's what it says. I don't know if it's true or not, but that is what the opinion of the tax court is on the facts. And that is likely always going to be the situation when you see a MicroCaptive fail or an R&D fail. They'll just say, you didn't follow the formalities. Also, private placement life insurance, you'll see the same sort of press releases. They'll say, we told you got into these abusive MicroCaptive insurance arrangements. See, I want to change that word abusive because I think that word abusive is not right, because what it is non-compliant. Because the headline should really read, IRS urges participants of non-compliant MicroCaptive insurance arrangements to exit from arrangements. That abusive part is sort of a qualification that's not really necessary. And it sort of misleads people to think, well, my MicroCaptive isn't abusive. Why would it be abusive? Right? If the IRS is truly interested in alerting people to this problem, well, don't call them abusive, because no one doing these thinks theirs is abusive. Call them non-compliant. Because maybe that will give someone an alert to say, I have a captive. What's this a compliance? Well, here's your checklist for compliance, right? Wouldn't that make a lot more sense to say, hey, here's your checklist for compliance to make sure that you didn't get hung up on this? But the fact is, it's like I think, and this sort of might explain it. I don't know. Is this a little conspiratorial? But see, here's the thing. I think that the IRS likes these cases. I think they like having abusive MicroCaptive insurance arrangements to examine, because the cases are actually kind of easy. As soon as someone's in non-compliance, it gets pretty easy. The battlefield is in the IRS's turf, and so they love arguing cases like this because it's just going to come out in their favor. And they get to have, and here in this press release is something that's kind of interesting. Okay, this is in the 5th paragraph of the press release. The IRS says, in the past several years, the IRS has ratcheted up its efforts to combat abusive MicroCaptive insurance arrangements. In 2020, the IRS deployed 12 newly formed MicroCaptive examination teams to substantially increase the examinations of ongoing MicroCaptive insurance transactions. Well, that number 12 is listed. So I wonder, well, how many were there before? Now, I know captive examinations occurred before, but I know that they didn't really list the name. Now I'm going to click on this link to see what is the link that they're going to here, to see, was this going to tell us anything about the IRS takes, here's the link that they're going to. This is a January 31st, 2020 article. The IRS takes the next steps on abusive MicroCaptive transactions. Nearly 80% accept settlement, 12 new audit teams established. So here it is. The IRS, so they had well, wow. Okay, so here you read this press release to say, yep, we urge you to exit MicroCaptive insurance arrangements. And then you go to this press release to say, yep, nearly 80% accepted a settlement. Like, okay, well, what settlement, right? What if you had one and you're like, well, what should I do here? Well, what settlement? What is there talking about? So it's actually specific people. This was made to certain taxpayer under audit who participated in abusive microcaptive transactions. So that's what this is about. These people weren't just random people off the street, but rather the IRS says, hey, your name showed up on this captive, and we're going to start doing this. So here's our here's how we're going to go with it. So that's what this was about. Now I think the thing is that you can kind of see though, when we're trying to say, well, this is sort of, because this is what I'm trying to determine. These 12 new examination teams, how many additional were there before? Were there any? Is this an entirely new sort of is this an entirely new procedure the IRS is following? Is this an add-on of their old examination, or is it a totally different program where they're sort of going after these issues? And it looks like, I would say it looks like they are going after these issues because they have the 12 new examination teams. Now, look, when you have an examination team, that's not one examiner. There'll be one lead examiner, but you'll have a whole bunch of financial specialists offering support and counsel. So 12 teams, you're talking about my guess is you have teams 2 to 5 people, something like that. And they're really focused in on the issues. And the other issues they have is they kind of have gotten going. And just like we've seen with a lot of other foreign reporting penalties, it really took the IRS a while to figure out what was going on. And now with those, they're kind of going hog wild, penalizing first, asking questions later, but then they all know about this. So my guess is that the IRS's productivity of these 12 new examination teams will pick up. So I think the thing is, and they kind of probably, and this is probably what they have, is they know which insurers are the ones to go after. Now there's ones that, they'll waste their time going after, which is fun. And I mean, isn't that the position you want to be in? Isn't that the position you want to be in when the IRS says, oh yeah, we want to examine all of your things? You're going to say, good. I want you to. I want you to waste as much of your time as possible. I can't wait for you to waste all of your time looking at all my stuff, looking for something to claw your way in. Right? Isn't that where you want to be? Isn't that where you want to be? Just sort of looking at them. Because now they got to go back. They got to go back to their supervisor. Hey, how'd that case go? What'd you get? We got nothing. We wasted our time. And then maybe you could take even more pride in knowing the IRS they don't have the examiners that they do. Now, in this case, they do have the examination teams, but overall, the audit rate's really low. So when the IRS puts one of their scarce resources, one of their scarce teams, one of their highly educated, very skilled MicroCaptive teams, all that brain power. And I mean, you're talking about millions and millions of dollars in creating the processes by which to penalize this. The IRS has so much invested in trying to trip up people with this that the best revenge you could get on them is to comply with the law 100%. And be nice the entire time. Because here's the thing, Congress gave such a smoking deal with captives, and the micro-captives allowing so many of the smaller, hopefully bigger, you're smaller now, but that micro might help you get pretty big. Congress gave you such a smoking deal. Let's not think of this the same way as, this is not, you're not a landscaping business. Give me a little bit on the cash. Give me cash on the side. Let's not do it like that. Because they're allowing you not to report income, basically. When you do a captive correctly, you don't have to report that income. And if there's taxes to be paid on it, it's not till who knows when. So that's what you need to understand. And that's sort of how you want to read this. When you read this press release, I want to train you to think of it like this. IRS urges participants of an abusive micro-captive insurance arrangements to exit from arrangements. What I want you to think of is like, you know what? I read that headline. I think micro-captives are probably a good idea. That's what I want you to be trained to do. To immediately says the IRS is a bad idea. Like, why? Why is it a bad idea? It's a bad idea if you don't comply. Fantastic idea if you do. All right. So I think there's a few more things of this press release. That's sort of the meat of it. Here's one more thing I want to add. We get to our second to last paragraph. It says the IRS advised that MicroCaptive insurance transactions have the potential for tax avoidance or evasion. Now, the IRS writes that sentence, and I kind of know what they mean by that sentence. They have their own sort of flavor of what they mean by tax avoidance or evasion. But do you see how the layperson, even maybe someone who's not a layperson, will look at that one of the best things in the world? The IRS advised that MicroCaptive insurance transactions have the potential for tax avoidance. Fantastic! Yes, that's what I'm looking for. And for most people, evasion is the same thing as tax avoidance. You just don't do anything criminal. Well, I evaded the taxes. What'd you do? Oh, I used this legal thing. Oh, okay. But yet the IRS always wants to sort of characterize tax avoidance as evasion. It's always this creeping thing. See, I think paying the least amount of taxes and giving the least over to the government is a great idea. I think following the law to your advantage, as full as you can, is a wonderful idea. And here it is, it's like the IRS has a chip on its shoulder. We don't really like you doing that. Anyway, so I would say this: if you do have a business, this is captives are really something you want to look at. And it's really wonderful revenge to get on the IRS. If you are, because here's another way to think about it, that your compliance costs on a captive are going to be high, right? But that's a good cost to pay because now you have a weapon. You paid for that. And the IRS ever wants to look at you sideways, you just bury them in compliance. And that's one of the ways and one of the strategies we've learned over the years. One of the best ways to handle the IRS is to bury them with compliance, because here's the ultimate thing. And I think it was a quote of, Abraham Lincoln. Who knows who really said it, but it's something like, if you want to get rid of a bad law, enforce it to the letter. The tax code is the worst law of all time, the worst series of laws of all time. There's no question about it that we as Americans should never use the word draconian. We should never use the word Byzantine. Those words don't mean anything to us because we have the most comically absurd piece of crap imaginable. That this stuff is mind-blowing. And how utterly dense it is, and the supposition that every U.S. person in the world is not only a genius, not only is every U.S. taxpayer in the world a genius, they have decided to apply their genius to learning about the tax code. That is the number one supposition of the U.S. tax code. Not only that, they assume that all of their IRS employees always will have all knowledge of everything that's always done. So it's really a lot of fun as we go. So that's the thing that I think when you're sort of feeling up against the IRS, there is a way to fight back. Because guess who else has to deal with the IRS? The IRS. There. All right. I think that will do it for then. I'm going to try a few more to see how these goes. And I might be adding some videos so you can see my shining face. And other than that, this is Anthony, Parent of IRSMedic. Let me know what you think of this format. And I'll be doing a few more. So look for more shortly. Subscribe if you wish. Bye.